Good morning. It's Jeffrey Christian of CPM Group. It's about 11:15 here on the morning of Thursday, the 6th of March. We're doing this video on Thursday rather than Friday. We've been at the Canadian Prospectors and Developers Association of Canada annual convention from Sunday through yesterday. So we didn't do a video on Tuesday. I did a little bit of ground to cover up. We want to talk about gold is in fact a fiat currency. And we want to talk about the dollar and the myths that people and governments are racing away from the dollar. Talk about the silver crisis that never was, and then a little bit of a market update. So the first thing is, let's talk about the dollar. The world's not dumping U.S. Treasuries or dollars. It's actually racing into them. This is a chart that shows overseas Treasuries securities held overseas. And they rose 10.3% in 2023. They rose for the full year 2024, 7.2%. And in the year from the third quarter of 23 through the third quarter of 24, they were up 15.4%. More treasuries are being held overseas than ever before. It was a record $8 trillion at the end of 2023. It's about $8.6 trillion now. Dollars and treasury securities are not being dumped. And the dollar's not plummeting. I was listening to some gold people on the YouTube this morning, just sort of catching up on things. The person was talking about the collapsing dollar. The dollar is 7.4% higher on a trade-weighted basis than it was at the start of 2024, yesterday. It's 16% higher than it was at the low that it had in June of 2021 after the COVID and during the beginning of the lockdown. It's 49% greater than it was in May 9th, 2011, following the Great Recession, the global financial crisis, the international debt crisis, the sovereign debt crisis in Europe, Greek problems, and on the eve of the downgrading of Treasury credit ratings ever before, for the first time ever. That occurred in August of 2011. It's up 49% since then. The dollar's not collapsing. You don't need to buy gold because the dollar's collapsing or because central banks are dumping all of their treasury securities. There are other really good reasons to own gold and silver. It's just not those. I have a thing. When someone starts talking to me about fiat currencies, I stop listening. Because if you talk about fiat currencies, you don't know anything about currencies. Let's start with, what's the definition of fiat? This is from the Oxford definition dictionary. A fiat means a formal authorization or proposition, a decree. Now that's actually interesting because that means that somebody official has said, hey, this is what it is. But a secondary definition is that it's an arbitrary order. And I think that's why people sometimes say, oh, it's a fiat currency, because they think that a currency's value is somehow or other arbitrarily dictated by the government that issues it. We have floating currency. That is true in some countries, that have fixed exchange rates that they set. But most major currencies float. And the currency exchange rate is determined moment by moment by everybody involved in that currency market. It's not fixed by a government. It's determined by the supply and demand from everyone that wants to participate in that currency market. An arbitrary order says, this is what the dollar's worth, this is what the euro's worth. The appraisal drop, this is an example from the dictionary, the appraisal dropped a value from $75,000 to $15,000, a bureaucratic fiat. All right. So if you say that A fiat currency is a currency the value of which is arbitrarily assigned. That's interesting because currencies, such as we know them, are arbitrarily assigned by the whims of the market. So, ipso facto, you could say that gold is a fiat currency just as much as the dollar or the euro or the pound sterling or the Japanese yen. If you're going to call them fiat, you might as well call gold fiat, right? Why was gold worth $250 in 2000? Because that's what the arbitrary whims of the market said it was worth. Why is it worth $2,918 today? Because that's the arbitrary whims of the market, right? The dollar and gold, the values are determined in the market by the whims of the market, by the collective buying and selling, bids and asks of everyone involved in that market. Now, the reality is that gold's not a fiat currency. Gold's value is determined arbitrarily in the market on an ongoing basis. And it's equally true that the dollar and the yen and the euro and the pound sterling are not fiat currencies because their values are arbitrarily determined by the whims of the market on an ongoing basis. So if you hear someone talking about fiat currency, you can stop listening to them because they're telling you, I don't know what I'm talking about. Yeah, we had well, I won't go there. A couple other things that I keep hearing in increasing frequency lately that are just nonsensical. The one thing that central banks are dumping the dollar, that the dollar is dead or dying, and that the U.S. government's going to revalue its 261 million ounces of gold because it has to in order to solve its debt problem. First off, any revaluation on the part of the U.S. government would be arbitrary, a whim, a proposition, or a decree. Any revaluation of the gold would be an accounting act that would basically be meaningless to what the value of that gold actually is. No one in the U.S. government or in the central part of the gold market thinks that the U.S. gold is worth $42 an ounce. That's what it is marked at and valued at on the U.S. Treasury's accounts, but that's not what it's worth. Similarly, if the U.S. government came along and said, well, we're going to revalue our gold to $10,000 an ounce or $140,000 an ounce, and that will solve our budget. No, it won't solve your budget. It's a meaningless number because the gold price and therefore the value of the U.S. Treasury's gold is not determined by what the government says it is. It's determined by the market. And if the government of the United States said, well, let's revalue our gold, that would be a red flag to the market. Worse is the U.S. government said, let's try to use our gold to pay down our debt. And I did a video a few weeks ago in which I showed you there's about $800 trillion in value at today's market price, $2,900, in the U.S. 261 million ounces of gold, about $800 trillion. That is 5% of the U.S. government's annual current account deficit and about 2% of the $36 trillion of U.S. federal debt. So if you said, well, let's try to use this gold somehow or other to solve the deficit and debt problems, it's meaningless. It's 5% of the deficit, 2% of the debt. And you would not get $2,900 if you were the U.S. government and you said, let's start selling some of this gold. Because it's the biggest stash of gold in the world. And if the biggest stash of the gold in the world is going to be mobilized, that means the supply of gold into the market is going to be enormously increased. And the price of gold in the market is not going to stay at $2,900. It's going to fall sharply. So it's kind of silly to even think about the U.S. government revaluing its gold to somehow or other fix its budget and debt problems. It knows how to fix its budget and debt problems. It just doesn't want to do that. Right? So it's terrible stuff. Let's talk about the silver crisis that never occurred. As of yesterday, the March Comex futures open interest was down to 15 million ounces, and the May open interest was up to 568 million ounces. So April's going to be interesting, the second half of April, because those May contracts will roll forward. But the 612 million ounces of open interest that existed in the March contract at the beginning of February was pretty much successfully rolled forward without really driving the silver price higher. There was the silver price did rise over the course of February. Part of that was that roll, but it didn't spike up to $50 or anything else. The silver squeeze never materialized. It still hasn't. It never will. Up in the upper left-hand corner, Comex silver delivers through March 5th were 12,000 contracts representing 62 million ounces of silver. That's a large delivery for an active delivery month. It's larger than the 47 million ounces that occurred a few months ago. And you can see that the Comex inventories have meanwhile risen very sharply. Both registered inventories are up to 140 million ounces, and eligible are up to 277. Total inventories are up at 416. So Comex silver inventories, the amount of silver being held in Comex registered depositories, has actually increased. 62 million ounces worth of those depository receipts have been delivered. And part of the delivery process is that any number of trading companies will take delivery, see what they're being delivered. If they don't want to keep that silver because they don't have physical demand for it, they redeliver it back to the Comex clearinghouse the next day. They have 24 hours to do that. So you'll see those contracts being delivered over and over again. It's not necessarily 62 million ounces of silver. Some of that is the same silver being delivered and delivered over again. It's kind of faint because it's the Comex report, but on the right-hand side, you can see the deliveries in the silver contract so far to date. The first delivery date was the 27th of February, and there were 10,000 contracts delivered. Through yesterday, there are 12,455 55 contracts. So something like 90% of the delivery occurred in the first day. And you see, it's in the hundreds of contracts over the successive 4 days. So the silver squeeze just didn't materialize. Probably won't, because that's not the way the market works. There's plenty of silver to be delivered in the United States and around the world. Gold prices have recovered some. They had fallen sharply in the last week of February. They came back this week. Political uncertainties and anxieties, as well as economic uncertainties and anxieties, have risen. And that's probably going to keep the gold price high, at least for the next month or so. We'll see where we go. And silver prices also came off sharply in the last week of February and then have started to rise back. They're trading on either side of $3 right now. As I said earlier, gold is $2,918. It had fallen below $2,900. In fact, it's been trading on either side of that for the last couple of days this week, and it was below 2,900 a couple times today already. Right now, it's a little bit above 2,900. Silver's $33.20 as I started this video 15 minutes ago. It's also trying to hold above $33. There is a potential for some higher prices. Platinum is $986. and palladium is $956, moving kind of sideways. That's all I have for today. The PDAC was a very interesting event. Think that the mining industry is much more sober. They like to see the gold and silver prices where they are because they're nice and high. But the mining industry is facing a lot of other structural issues, including financing and permitting, which makes it very difficult to operate profitably in this kind of economic environment. We'll be launching our gold yearbook later this month, March 25th, with an online briefing. Silver will come out in May 27th, and the PGN yearbook in July 29th. I started talking at the beginning of this video about some of the misinformation and disinformation. A lot of it's conscious efforts on the part of various entities to mislead the investing public. That's going to be a bigger problem than it has been. It's always been a problem for 5,700 years. It's going to continue to be a problem, a bigger problem than it has been in recent years, and you need to watch out for it. You can do that by getting research-driven research and consulting services from CPM Group. People pay us to be accurate, not to be bullish. We're not an advertising company. We're not a marketing support company per se. Our research is used in marketing support by a lot of legitimate companies around the world, but people pay us to get it right, get the supply, demand, information, and analysis right, and get the price projections right. And in this period of increased disinformation and misinformation, relying on research-driven research is really a sensible thing to do, because there's a lot of people there who would like to separate you from your wealth. You can go to our website, cpmgroup.com. You can pre-order our yearbooks. You can order last year's yearbooks. You can subscribe to our monthly precious metals advisory. You can sign up with our retail investor program. You can get a lot of free reads and free videos. And you can send us an email at info@cpmgroup.com saying, I'd like to talk to CPM Group, someone at CPM Group, about how you guys can help me make wiser decisions and avoid the pitfalls that all of the lies circulating about gold and silver and platinum and palladium make it more difficult to invest wisely and accurately. Take care of yourself. Try to do something good for the world. We'll talk to you next week.